Good morning, option traders. We are going to work a little bit today on my process for picking out which options I'm most interested in, mainly option selling. Although on this correction, I'm tempted to buy some puts. However, that's not really the scope of this presentation. If you are interested, go over to fundamental trends and take a look at the rare service if you want to do some swing trading or some hedging of your portfolio. I saw this on actually in the fundamental trends chat room today. Shooter put it up, and I think that this really exemplifies what I have been talking about for months. And what have I been talking about? I've been saying that the Fed will back off relatively quickly. I think somebody was very amused by the fact that I said the Fed is going to hit us high and hard in the early terms, early going here, and that I expect big rate increases and QT to manifest relatively quickly in effect, that we are going to be able to flatten out demand by the end of summer, and that the stock market starts to get pretty hit imminently. So to me, imminently is within 6 months, and then the Fed will back off. So in this chart from a blogger who goes by Mac10, he has this stretched all the way out to 2026, and I guess that's possible. I think this will all happen this year. I think everybody is into the crowded, oh look, we're going to crash trade, and I think that you'll get your continuation in here, and then all of a sudden, the Fed's going to say, well, maybe we're done tightening. I think that happens in about September. And then if the repo market breaks, they will restart QE. Remember what I told you. There's $1 trillion of money sitting there to fix the banking system if it breaks. And it's almost certainly going to break. So could we have this crash all the way down to 2008? I mean, I guess. I think that's incredibly unlikely. I'm not even so sure that we can get back to here. But I would say that's my worst case scenario, is a S&P 500 around 2000. However, our official prediction is right in here. So higher than the 2020 crash. But we will reclaim most of that run-up from the bottom in 2020 to the top of a couple months ago. How fast will that happen? That's a big question. But what we should know is when you look up here, you're primarily a seller, not a buyer. And selling puts that get you into this area, especially close to this area, because these levels are about right, about as far as I can see, about 3,000 on this SP 500. That is pretty attractive, and the premiums are high enough now, and the volatility, right, is driving the premiums, that on the beaten up stocks, you can get pricing that would be equivalent to if the market corrects to about here. Right now, you can get that pricing. Now, you can try to be perfect, and I get it. However, the scaling in approach, just a little bit now, a little bit in a week or two, and a little bit more in a few weeks, and a little bit more in a few months. That gets you that dollar cost averaging approach, so that whether this goes to here and then shoots back up, or gets all the way down to here, jitterbugs and then shoots back up, whatever the shape of things to come might be, it'll probably be similar to this, but in reverse, right? Looking in the mirror, the upside down mirror, something like boom, 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 right? Probably going to be five waves. I don't think this is going to be a typical ABC correction that you'd see in most corrections. I think that the liquidity is draining out so fast, and the dollar is going to get quite the bid here, at least in the short run, before it corrects to let the air out of the dollar, and then the dollar will still continue on its long-term uptrend. However, spikes are meant to be met with declines, and that's probably how this will happen too. Now, how does this get used with my screening method? Well, like I said, I'm looking for prices that correspond to this area here, and some stocks are already there, so we use the screener. You say, okay, in my TradingView screener, I want to look at the strong buys, the buys, and the neutrals according to the oscillator ratings. Why the buys and the strong buys and the neutrals? Because I don't want anything that has a lot of momentum to the downside. That is one thing that we have to always remember, is don't try to catch those falling knives. So when we get to those jitterbug zones, that's what should be pretty interesting to us. So we start with the screener and say, okay, let's rate this by oversold. RSI on the weekly chart, right? Set it to weekly, and take a look at what's going on here. Okay, and just for funsies, let's look at the monthly. Is anything already sold off on the monthly? Well, look, PayPal is there. Teladoc. Zoom's not quite there. So that tells me that maybe Zoom has another leg down. But let's go back to weekly and take a look. Here's PayPal. And this one, I had a bottom fishing price of 78. And I believe Shooters is 73. So here is Shooters chart. And we have a lot of similarities here. His big second entry point is here down in the low 70s, minus 78, 79. But we both targeted that area, you know, as it closed in on 100. You know, Shooter is right up here. You know, daily triggers, wave long. That's where the last primary long was. It looks like it's going to probably get down here into the 70s somewhere. But it's real close. So right now it's just a bit under 90, which means that you can go and look at options on it. Again, we've had one set of options that you should have been able to take profits on from a couple of months ago. Let's take a look at the July options. You say, well, if you think it's going to get under 80, and you'd be happy with a price under 80, you could sell the July $85 puts, get around almost $9 for a net price of 76. So that's square in the middle of that area where Shooter and I are targeting. He's saying about 71, I'm saying about 78. You know, he'll probably be closer to right than me, but you know, you scatter it in there and you say, okay, I'd be pretty happy with a price on PayPal of net 76. Now, you can try to be perfect, but always remember that when you try to be perfect, you're often the enemy of good, all right? So let's consider this particular put. All right, so we know that we like PayPal. Pretty much could sell those puts right now. Again, you can try to be cuter and more perfect, but trying to be perfect is often the enemy of the good. So scale in. If you have the room in your portfolio to sell 3 puts on PayPal, maybe sell one today, one if it drops a couple more dollars, and then another one if it drops a couple more dollars. Let's take a look at Zoom, which does not have the monthly chart that says it's oversold. But the weekly chart says it's oversold, and it's been in that jitterbug zone now, right in our buy zone for a while. If I pop this up to the monthly, let's take a look here. Look, the oversold readings. You can see it here on Money Flow Index. Shaken money flow is negative too. So let's take a look on the monthly, and you can see it's actually still oversold there too. Well, maybe I just didn't see it on the chart. Let's see here. Let's switch this to monthly. Did I miss Zoom? Oh, I know why. Watch this. If we add the cells, aha, wahaha, there's Zoom. So the oscillators say that it's still going to go down. On the monthly, let's see what the weekly says. And I just do that as a shortcut. I actually like to look at all of them. I know in my head that I'm most interested in the ones that say buy. So that's interesting. What is still heading down? Is it kind of negative MACD signal? Yeah, it looks like it still has a negative MACD symbol, or chart. But it's close. Look, it's flattening out. There's not much left to go down on Zoom. I'll take a look at what Shooter had to say about it. Let's do a quick search for his Zoom chart. See what he's saying. For those of you who are on margin of safety investing, you know, you're getting the benefit of Shooter's work. I just don't reproduce it so much. Main reason being, this is a lot of work to reproduce it. It's not necessarily fair to him. Well, I'll have to ask him to do a newer chart. I don't see one. Let's look at the February chart. So way back here, a couple of months ago when it was higher, he said 118. And here we are at 102, so I'm sure he's lowered that. Yeah, Shooter, if you get a chance, if you're on here, maybe do a Zoom chart. I'll ask him in our chat room right now. How's that? Alright. I just invited Shooter over, see if he sees the message. Alright, so with Zoom, I'm going to wait on Shooter to see if he's looking at a price. I could see him on an Elliott wave getting all the way down into the 60s. So let's see what he has to say. Alright, so in any case, when you go through the screener, you're taking a look at these. Somehow OnTrack has a buy signal. I just can't figure them out. That's why I only have the preferreds now, because I don't think they go bankrupt. I do think the preferreds get back to par. I just don't know when, but I do think that's a pretty safe bet that the preferreds get back to par someday. Because I just think this company gets bought out. Maybe they get bought out for $1 on the common, but the preferred still has to go to par. Spotify, I'm not real interested in. Meta, I'm not interested in. Invite, if I'm gambling, we could do that. Shooter is just a freaking machine. Look at that. I said it could get down to the 60s. He has 73 as a potential entry. If you're more aggressive and you like the story, you could do it up here at 95. But if things really get bad, your third standard deviation is all the way down into the 40s. And that's what these mean. These are standard deviations. So I would expect most of the second standard deviations to hit because I think the correction will be fairly serious. So I'd be looking middle 70s on Zoom. Alright. So what else can we look at? Just keep going through here. I think Shopify's got a lot more room to go down. Coinbase, he put up a chart as well. Seeing as he's being so efficient, let's ask him again. There. We'll have fun with Shooter. So, good idea, do a Coinbase chart too. I thought he's probably got it up in this thread somewhere, and that's where I saw it. Oh yeah, look at that. Alright, so here's the Coinbase chart. And he's not completely built out on it yet. But remember when I said that I just couldn't figure out where the bottom was on Coinbase? He's kind of in that same camp. Just can't quite figure it out. So in a case like this where Coinbase might be undervalued at this point, it's hard to tell. They have been profitable. But if the market just hates them, look how it broke through this trend line. I mean, it could really get down, it's not going to 0. But could it get down to 50? 40? Maybe. It's really hard to know. So in a situation like that, what do we do? Well, what did Charlie Munger say to do? Some things are just too hard to figure out, so we move on to something else. So while I like Coinbase, I'm not having an easy time figuring it out, so I'm not going to bother with it. As you know, a long time ago when Roku was much higher, I said sell it. I think that's proven to be pretty true. Right? So I don't even know where I would put a buy zone on this anymore, because I don't know where on earth their earnings are going, given that I think they have a lot of competition coming. I mean, like mega competition. So I think that around this line, before the COVID rally really took off, is where I want to be. If it gets to around $50 a share, I'll revisit it. I'll do the fundamental analysis on it at that point. But there's very little that's attractive in Roku for me. You know that I said that a super long time ago. I thought this was puffery. And given that it's very easy to do what Roku does on a platform, they probably, I think they're just going to jitterbug for a long time. Well, let's see here. Did Shooter do a Coinbase chart? He sure did. So this is so bad that he can't figure out a price for it either, right? I mean, this wedge just keeps going down. So a price towards 50, 60, 50, 60 on Coinbase. If we get that, we probably have to buy it because like I've said, they've been profitable. So it's not like this is a making no money company. It's just, what is the valuation going to be in the future, and to what extent do they benefit from the dip? And there's two things that I want to talk about today when we do this. On the fundamental side of this, when you pick out your stocks, think about the capex that a small cap company or a mid cap company is expending to expand their market share, to build out their supply chains, to do their marketing, things like that. All the early stage things that companies have to do. And a lot of times the people are out there saying they're not profitable. They haven't been profitable in the 5 years they've been on the market, and blah, 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 not profitable. Right? They say that all the time. And if you remember a company called Amazon, the major criticism of Amazon for a decade was they're not profitable, they're not profitable, they're not profitable. And that's what people kept saying. And the stock got beat up from time to time. And one day, Jeff Bezos in a meeting said, we're not going to have to spend as much on CapEx in the future because we've built out a lot of important things. So our percentage of CapEx to revenue is going to go way down. And 3 quarters or 4 quarters later, I forget which it was, it did. And we all know what the Amazon chart looks like in the last 5 years. So those transition periods ahead of CapEx shrinking are incredibly good buy zones, because that means that their revenue is going to continue to grow as their expenses come down. So in your household, when your income has gone up, that's been good for your balance sheet, right? And what about those times in life when, say, the kids move out and you're still at your peak earning years? So how many of you in your 50s or maybe 60s or even 70s just remember when you had a lot of income for a number of years and your household expenses were much lower because you weren't spending money on the kids, right? Those are great years. The value of your portfolio goes up because you're adding to it. Maybe you upgrade the house. Bigger house usually appreciates more, right? Maybe not as a percentage, but in absolute dollar terms. So that's the same thing that happens with small and mid-cap growth companies. And if we can anticipate when the capex is going to go down, just a little bit before they say it's going to go down, because that's when the market knows, because nobody, forecasts ahead on things like that. I mean, when I say nobody, I mean almost nobody. Maybe 1 in 10 people is. Other people are looking at backwards-looking data. That's why I use a couple of AIs to project out, revenues and earnings. I actually switched my AI a couple weeks ago. I was in the experimental stage for a couple months, and I decided to switch. So I'm not using Sentio anymore. I'm using something else, which it's not as slick, but it does the job for 90% less. 90% less is pretty cool. I reduced my capex on that. Just like solar is down 90% in cost over the last decade and is going to probably drop another 50% from here as the supply chains expand and try to capture the growth that the government's pushing. Another way to think about companies is not just when their capex is going to change, but when something's going to push them along at a much higher growth rate, or if they have an asset that's going to go way up in value. And on Coinbase, the asset that they own, and they're a top 10 holder of Bitcoin, is Bitcoin. So as a top 10 holder of Bitcoin, if Bitcoin indeed goes to between 300 and 500,000, which I think for sure the range it's going to get to, because it's an asset and it's scarce. And I showed you the headline the other day that 84% of institutions, and the number for family offices is similar. You got 80% of the big money out there saying it's a real thing. So I think Coinbase has a very bright future. I just don't know where to buy it yet. So we need to figure out a way of scaling into Coinbase. And along this line is probably where we're going to find it. And I would anticipate that it happens this year. So if I had to guess, I'd say real close to 100 for sure. And then maybe we have to wait until 70-ish or 60-ish to get another hunk. And that's another thing about scaling in. You don't do it every $5 or every $2 or every 3% or 5%. You put your scales in, your spots where you buy at technical levels, and they're generally going to be, right, based on standard deviations. So you're talking double-digit percentage differences in price. 20-30% a lot of times. Don't goof around with single-digit moves. That's not going to help your cost basis. All right, so going back to this, I don't think there's a lot that I'm really excited about right now, but there are a couple of ETFs that I want to look at. I have those labeled in blue. Got to reset my filters. There we go. And you go, okay, what's out there? And I'm watching a lot more ETFs than I have on the VSL. Russia, I'm not excited about Russia. Here's the thing with Russia. If Putin ends up dead, we should immediately buy Russia. Just throwing that out there. So maybe we start a Deadpool on Putin. Let's see here. It says that the yen is oversold. So the yen is interesting. I know that Shooter follows that much more closely than I do. That's part of his trigger system. ARC Genomic Revolution. ARC is also, oversold. I don't buy this one, but the global fintech is oversold. What I do like is Block. So we're going to label this one blue. So this is one that I plan to add. It's almost oversold. It was on the global trends. So based on the oversold, I'm thinking right about there would probably be the first price, about 24, and then right about there. Well, right about where I have it. So 24 and 21. So that's about a 15% difference, right, between the two price points, the two scale points. That's what the top line is that's where we want to start selling puts or take a starter position, or both. And then this bottom line is usually where, back up the truck. Because this support will move up. And these are some pretty interesting companies that have big holds in the digital transformation that's going on out there. I actually think that these are going to be some of the best things. They're coming off of the meme rallies, and now we're getting into this valley of despair, valley of death, and then we're just going to adopt things like digital contracts. And blockchain is going to wipe out all the other coins. All the dog coins are going to go away. Again, because you're not going to buy your pizza with cryptocurrency unless it's a crypto dollar. Because they have laws for that. China's already outlawed Bitcoin. And I think they're going to allow it to be owned as an asset at some point. But because every transaction is taxed, they're not going to, that's going to discourage people from actively selling it very often. All right. So Block is getting close. Some folks asked about end phase. End phase still get to around 100. Shooter has a chart on this one too. Sun Run, this one's really close. Again, we're at the point now where we really have to focus on these. The shortcut into all of these is PBW, which is what I'm going to do for most accounts. So I get PBW in the low 40s. I'll probably be pretty happy camper. And then YOLO, I already said it could get down to 6-7, and it might, but I think we're at the point where you start to scale in. So if you don't have YOLO, take a starter or sell a put. And then do it again down around 7 if it gets there. But like I said, there's a catalyst for this that isn't directly tied to the market. So when you think about, the market's going to go down, so I should just get rid of stuff. Not necessarily. We've seen for a year and a half that the corrections have been rolling. A lot of the corrections are mostly done, like on this one and on the fintech. Are they all the way done? Probably not. But are they most of the way done where you should be taking teeny tiny nibbles, or at least selling the puts? Probably. So with YOLO, I use Yahoo just because it's super easy. It's actually easier than the NASDAQ website. With YOLO, go say, okay, August. A lot of people get high in August. Let's talk about that. All right, so if YOLO is going to get into the 7s, maybe. We don't know that it will. I probably wouldn't mind selling this 849 put, which I don't know what they did to make that happen. Get around $1 for it. Gives me a net price of $7.49. So if you don't have any YOLO at all, selling this put, 849 put for August for $1, and make sure you always set your limit price a little higher than the ask. So if the ask is $2, which is probably obnoxious, start at $2 and see what happens. But then scale it back a nickel or a dime every 20 minutes until you get really close to the last price, and then just leave it there. So maybe I'd get from $2 to $1.20 pretty quick, like in an hour. Or maybe I just start at $1.20, because I don't think the 2 has got any chance of getting done. But if you want something even more conservative, you set your limit at 2, good till cancel instead of for today. Just let it sit there. And maybe every day you decide, I'm going to leave it there. Or all of a sudden it's $1.60, $1.70, and you're like, this market looks like it might be petering out on the downward momentum. I'm just going to take it. I'll just take the $1.60, $1.70, whatever. Again, you don't have to be perfect. You just got to be really good. And if you're selling options, you know, you can't just look once a week. Selling options, you do have to look about 3 times a day. You don't have to look all day, but, you know, before the open or right around the open, midday, you know, when you're having your sandwich, and then again after the market, if you have to make any adjustments. Now, I make a lot of my adjustments late at night, like around midnight. I like just to see where the futures are opening. But also, right before the market is usually a pretty good time too, because you get that pre-market information. You know, you see what Asia did, where Europe is in the middle of their day. So in the half an hour leading up to the market open, you can, you know, set a limit and say, okay, I'll come back and check on it at lunch. And always be aggressive in what you're asking for. All right, so YOLO, you really should be starting to scale in here. PBW, the options are pretty expensive. So it's at 53 right now. Here's your Junes. So if you want a net price in the 40s, you can actually sell a $50 June put and get $3. I own some of the. What do I own? Well, I sold September puts. I sold 56s for $6, so that's a net price of a little under 50. But you could sell the 50s for June and get $3. I think that's pretty sexy. Shooter is saying that this can get close to 40 though. So again, if you wanted to say, well, I want to make sure I get it, maybe I'll just let it drift down. And at 54, the 54s are going for over $4 or around $4. Right, the bid and the ask. Just haven't sold any. So maybe I'll ask for $5 on the 50. Put a good till cancel order at $5. Again, the reason why it's hard for me to tell you what to do is because you're all so different. Your risk tolerances are different. Your portfolios are different. What I'm trying to get you to do is think about this in a way that works for you, right? So, you know, somebody says they don't trade very often. Well, no, that's not necessarily true. They're just not trading right now. There's a whole bunch here and here. If you go to September, here's the fixed 56s. That's me. That's a lot of that's me, right? So the thing with PBW is it is the future. We're trying to get the best price now. YOLO is the future, and we're trying to get the best price now because the rallies in these ETFs are going to last for years and years and years. And then you can sell some covered calls against them on the really short-term rallies that are unsustainable. And you'll get a chance or two every year or two on that to do that. But if you can create yourself a 3, 4, 5, 6% effective income by selling puts once or twice, or excuse me, selling calls once or twice a year down the road, I mean, that beats the heck out of a dividend stock, right? You get a diversified basket in a growing industry, get an income that's double or maybe even triple what the S&P 500 is yielding. It's a nice way to make money. So we're just trying to get the lowest cost basis possible now, knowing that we can't be perfect about it. We'll just try to be good, and we'll scale in at the top and bottom of the buy zone, or maybe in the middle of the buy zone, and if it goes below the bottom, it goes below bottom fishing, buy again. Depends on you. Somebody points out that AZRE is spending a bunch of money on CapEx right now. Yeah, one of the reasons I really like AZRE, which chart do I want to take down? I'll take down the Roku chart because I'm not going to transfer that. I've been updating the VSL as we go. You'll see the dates. So the AZRE chart is just screaming you should look at me. So let's rebuild this one. I must have been using a daily chart for that, or weekly. Yeah, I was using a weekly. Alright. Alright. Perfect. Alright. So it's gone below our bottom fishing, so we can adjust this chart, right? But look right there. That very well could be a double bottom. I'm glad somebody brought this up. That looks like a breakout. Look at the support. support, breaks support, turns into resistance. I mean, that's pretty standard, right? Support, support, breaks through support, and then it's resistance. I mean, that's about as standard as that look gets, right? Now, does it have one more leg to do? Go down? Could it go down to here? Yeah, probably could. So you look at the volume over here, and this is where the sellers get exhausted. You run out of sellers. So could this one get down to 11-ish? Yeah, it certainly could, but it's already at 14. So if you already own AZRE, you're trying to get a really low assignment. So let's look at July. Those July 1250s you can get about $1 for. I really like that. But you can sell those Julys and get around $1. Man, that's a heck of an offer. Now all of a sudden you're right at what's probably the bottom fishing. Right? Again, I hope you understand this. This is where there's lots of buyers and sellers, and the sellers are pretty much gone at that point. And then some of these people add more, they scale back in, and then new investors come in. So what you really want to pay attention to is, when does selling exhaust? So it looks like the bottom on this is 11-ish. And yeah, if you already have a position, I think that selling this, even if you don't, if you're just starting, this is a great one to sell. I'm going to put this one in the article. I like that a lot. So somebody asks, does the Coinbase analysis imply a crash in crypto prices? Well, we've seen a lot of volatility in crypto prices, right? In the last 2 weeks, Bitcoin's been 48 and 39,000. I think it's a little lower today. I'd have to check. I think that the Bitcoin market is still very manipulated by the big wallets selling into this because they need money. And you have to remember that a lot of the big wallets are Chinese. So there is a transition out of China that's continuing. And when that ends is hard to know. And a shooter might have a better idea on that because he keeps track of those numbers. I just check on them once a week. But remember, 80 to 90% of all Chinese, or of all Bitcoin, was mined by the Chinese for years. So there's a lot of Bitcoin controlled by the Chinese, and they are still trying to get that money out of China. They're trying to avoid getting caught, turning it into a different asset. And I think that just continues to dribble into the markets. Now, as the family offices, which I've pointed out a lot of times, family offices are very vital to demand. So as the institutions and the family offices start to buy and add to their allocations, and remember that, these are groups that a lot of times at the family office level, they may only have 1 or 2 meetings a year. And then they have a manager who just operates based on the mandate they're given. So I've been offered jobs at family offices several times, and truth be told, those have always been much more attractive to me than hedge funds. Because I still get hedge fund offers, but it's always not much more money than what I'm making now, and a promise of good things to come, and I'm just not into that. Family offices, on the other hand, I mean, if you're managing money for a family with $100 million or $500 million, now all of a sudden you're like, okay, this is long-term money. This is true generational wealth. I can buy something, and they're cool owning it 5 to 10 years like they're supposed to be. Small investors who lust after getting rich, they trade so much, they usually shoot themselves in the foot, which is why I say 4 out of 5 people really shouldn't trade very much. What I'm showing you is probably the extent of what you should do. Only if you're willing to really learn technical analysis should you be trading with shooter. And if you're willing to learn technical analysis and you have a little bit of capital that you want to grow bigger, you should absolutely do it. But it's only for 1 out of 5 people, right? That 80-20 principle applies. Most people are working. Most people don't have the time to learn technical analysis and to put in at least hundreds of hours learning before you risk much capital. A guy like Shooter, who I think the last time he slept was probably like 2012. He's got thousands of hours in. The reason I don't do a lot of short-term trading is I'm more of a catalyst-driven guy. I don't want to watch charts all day because then that takes away from my fundamental analysis and the other things I do. But I understand how to use quantitative analysis. I got recruited to be a quant before it was cool. And those volume studies are gold. And I've told you quarters and even years ahead of time where a price was going to eventually get to. Now, the zigzags between now and then, I don't even try to get. That's shooter's gig. So, when you look at things like this, you go, okay, how should I think about this? And again, for most of you, you should think about it as how to get a long-term entry. If you're thinking about it of how to make 50 basis points, it's a whole different discussion with different things. But here with AZRE, if you want a fast-growing emerging market, India, in a fast-growing market, clean energy, to hold for the long term, AZRE's probably on the very short list. Haha. They have government backing. We have billionaires involved. AZRE is going to survive. They're going to make a lot of money. It's not like China where they grab private assets. Someday, India is going to be far more important than China. And it's all tied to the demographics. China is on the path in the next 10 to 20 years, probably closer to 20, of being a dependent state. What do I mean by that? It means that the amount of people relying on government benefits is going to skyrocket because of their demographics. It could have happened to the United States, but it won't because we have all the millennials. By the time the millennials retire, this country is going to be so rich, and there will be so much automation, and we'll have done so much to fix the climate change problems with clean energy and efficiency and changing the way the industry powers itself. Think concrete and everything else. And we'll finally have desalinated enough of the ocean to hydrate, and the farmland, and probably start to recharge the aquifers over those 20 years. That even though we'll have a bit of a demographic flattening then, it won't crush us. So the difference between the United States and China over the next 20 years is we have a millennial generation and they don't. And that's a really big deal. And automation is going to change so many things. One of the reasons why I don't worry about long-term inflation, at least for this country, is that as more of the physical jobs are done by machines, now all of a sudden there's your 4.5-day work week as kind of a universal thing. We'll staff offices and shops based on half-day schedules a couple days a week. What 4.5 days do you want to work? Maybe it'll be 3 full days and 2 half days. That is the future because the machines can do so much. Think about construction, putting in a highway. You see the big machines. Now think about some of those robots I showed you from Ford. What if the robots from Ford end up doing what the guys that used to carry around, hunks of concrete used to do? That's coming. Maybe a machine will have to pair with a human. That still reduces the need for the human on the heavy labor job by 50%. What if self-driving vehicles eventually occur? Now, I'm not so sure it will, but for sure the geofence stuff is going to happen because it's already started. So when you invest, I encourage you to be more of a futurist than a backward looker. Because thinking about things like CapEx and what direction is the big picture over the next decade is really where you find all those 10 baggers. Where you find dividends that are going to go up and up and up. Like Apple and Microsoft. The reason those are on the dividend list and not the growth list is because they have so much cash, they're going to have to pay it out somehow. Whether they spin off separate companies or whether they just pay gigantic dividends in the future, I don't know. But it'll be something because they have so much money and it just keeps coming in. And they're types of franchises that are still on the right side of history. It'd be different, right? They're not Philip Morris trying to figure out what they're going to be. Microsoft is a dominant cloud player now, and that is the succession to all the Windows stuff, which still exists. And Apple is adding more and more services, is a major streamer, is getting into fintech, and the cost of their phones are going to come down whenever they have to, because they can make them cheaper. But we agree to pay the higher price. One of these days, consumers will say, this other one is pretty good too. And one of the things that might drive that for Apple, actually since we're on it, because I know you all brought it up in your head, is with Apple, depending on what the regulations do with their messenger service, that could open up a lot of opportunities, and we'll want to keep close eye on that. Because if they're told to play nice with other SMS services, then people won't be required to have an iPhone to be the right color bubble, right? If you have an iPhone, you know, right, green or yellow, green or blue bubble. So, in any case, I think PayPal is something you should be looking at right now. AZRE block is getting close. YOLO's there now. PBW's almost there. I gotta think it goes down one more leg. And then if you want to buy the stocks individually, I think Sunrun is closer than Enphase. I think Enphase is going to get under 100. That'd be my guess. Remember when it was around, right around here? And I said I'm getting out of Enphase, and then everybody made fun of me all the way up here? It might get all the way back. It might round trip. Which means I missed a trade. But it's only going to take about 2 years to be like, it was a wash. Didn't matter. All right. Have a great day. I'm going to edit this right now, actually. And then I'm actually going to go to the Brewers game tonight because I forgot that when they changed the schedule, we got these tickets dumped on us. All right. Thank you very much. Have a great week. Don't get despondent. Get prepared because a major buying opportunity is likely by September, would be my guess. Between now and September. So do a lot of fun things. Get your limit orders in. If you're trading, you should have a lot of opportunities to trade if you're a trader. All right, take care.